What a phenomenal rally we've seen on the counter of Tata Motors in trade today. In fact, the stock surged most in more than a month. The last time we've seen such a tremendous up move on the counter was perhaps somewhere in the end of August 2020, 26th August actually to be precise. Today's rally was following a stellar recovery in the retail sales for Jaguar Land Rover. The retail sales of the car maker for September were quite significantly higher than the sales reported in the preceding quarter. So a very impressive QoQ recovery that we witnessed in the retail numbers. The total volumes for JLR stood at 1.13 lakh units compared to 74,000 odd units that they sold in the previous quarter, which indicates a growth of 50% on a QoQ basis. In fact, the company's volumes on a YoY basis, though they continue to be low from pre-COVID levels a year ago, but the company stated the fact that China sales were particularly encouraging. They were up about 14.5% on a QoQ basis and close to 4% on a YoY basis. And given the fact that China continues to be a very, very critical market for JLR, this kind of a recovery that they've seen YoY and QoQ is something that the street was very happy about, very cheery about. In fact, if you look at the month of September also, the sales for JLR in China rose close to 29% YoY. Overseas sales have been also very good, 35% QoQ. Their key geographies also saw sharp uptick. If you look at the UK, it's been very phenomenal. Europe has seen a strong near 80% QoQ growth. North America market has seen a 21% QoQ growth as well. In fact, what also adds to the buoyancy and to the cheer for investors is the fact that the company ended September with about £3 billion worth of cash and short-term deposits, up to £0.3 billion. Actually, not euros, pounds, primarily reflecting a positive free cash flow, which also added to a great extent for the investor sentiment. Global brokerages, CLSA and JP Morgan came out with their views and their recommendations as well this morning. CLSA reiterated its buy stance with a target of 220 rupees a piece. Analysts at CLSA indicated that China and the UK markets are the ones which are driving the recovery for JLR, and going ahead, sequential volume growth and cost cuts is something that will be driving the free cash flow turnaround for the company. On the other hand, you had a JP Morgan, which continues to be cautious on the counter. They maintain underweight rating with a target of 90 rupees a piece. While they do acknowledge that JLR's volume recovery has happened, it's been quite phenomenal, but they do believe that it still continues to lag when you compare it with several of its other peers. They're also cautious that, as they await better clarity on the deleveraging plans and the roadmap ahead. This is something that even the market is a bit jittery, a bit concerned about at this point of time. But however, today was all about the retail sales recovery in Q2 in September, especially in China market, and that is something that the markets continue to celebrate all through the day.